It's definitely cold in here in New Jersey, but it's hot at the AICPA. This is the Issues Watch podcast. Hello and welcome to Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobel & Company. These A&A episodes now qualify for nano credit. If you're interested in earning CP for this and other episodes, hit the pause button, go over to njcpa.org/podcast to find out how. A quick disclaimer, these views and statements expressed herein are my own and not necessarily those of NJCPA or Sobel & Company. Well, so we're going to take a little jump today. We're going to go over to the AICPA, and there's a big item that came out. SAS, Statement on Auditing Standards 145, understanding the entity and its environment and assessing the risk of material misstatement. So they came out with 104 through 111 back in 2004 or 5, let's even say 6. And since then, you can ask Frank Boutelet, since then, when we're going through peer reviews, people have had a very difficult time getting their arms around the risk assessment. And the AACP has seen this, and they finally came out with a pronouncement. So what are some of the pieces that came up? Well, they've had pronouncement, they're revising the pronouncement. There are many pieces that it's addressing. So it revised the requirements to evaluate the design of certain controls within the control activity component, including general IT controls, which is they want you to start focusing on a lot more now, and determine whether such controls are implemented. New requirement to separately assess inherent risk. When I'm doing peer reviews, many times I see that people have not addressed the inherent risk properly. Hopefully now, even when I read through the prior standards, I never felt that they had it good. That's editorial. Never felt that they really addressed it adequately. This says new requirement to separately assess inherent risk and control risk. I know that they're saying they're just separating those two, but I hope that they pull inherent risk more and describe it more for people and for the practitioners. New requirement to assess control risk at maximum level such that if the auditor does not plan to test the operating effectiveness controls, the assessment of the risk of material misstatement is the same as the assessment of inherent risk. You remember, some people use practice aids where it's high, low, medium, and you do that multiplication. They're trying to make that a little bit more logical now than it had been in the past. A revised definition of significant risk. New guidance on scalability. That's the big area that people have been complaining about. We all use some sort of practice aids. Some people, some of the bigger firms design their own their aids in-house, but most of us use third-party practice aids. I'm not recommending any of them in particular, but the problem that we've always seen is that they're one size fits all. And some of the larger ones feel it doesn't address the needs, and some of the smaller ones feels it over addresses the needs. And like Goldilocks, the one in the middle, thinks that it's just right, and they're still not getting it. So what they're trying to do now is they're trying to say, okay, we're trying to make these guides and these tools better to fit your particular situation of the company that you're working with. Okay, a new Standback, not stand down, not hot route. I don't know what hot route is, but a standback requirement. For starters, we got to start coming up with some really cool phrases in accounting. But stand back, that's like something my father would say when he was going to do something that knew he was going to get hurt doing. But a new standback requirement intended to drive an evaluation of the completeness of the auditor's identification of significant classes of transactions, account balances, and disclosures. Whew. We got to look into this one. Revised requirements relating to audit documentation. A conforming amendment, this is going to be a long one, a conforming amendment to perform substantive procedures for each relevant assertion of each significant class of transaction, account balance, and disclosures, regardless of the assessed level of control risk, rather than for all relevant assertions related to each material class of transaction, account balance, and disclosures, irrespective of assessed risk of material misstatement. This is effective for audits for financials for periods ending on or after December 15, 2023. Don't sit back and go, I got a lot of time. We got to get our heads around this. AICPA gave us a little bit of a pass on some of the peer review stuff. I know they're beat up some of us on some of these things, but they came out with this to try and address this and help us. It's time that we really get on this and try and figure it out. I'm not preaching, I'm saying I don't think they're gonna be as lenient with the findings in the future. So anyway, that is a big pronouncement that has come out. I strongly recommend you start looking into it. It's around 211 pages long, including the cover and the back page. So do yourself a favor, grab a copy of it online and start going through it. We got some time. I'm sure there's going to be sessions. I'll mention it later. I'm sure there's going to be sessions where they will be talking about this type of stuff, if not just in November, in the near future. Okay, good Journal of Accountancy article recently on remote auditing procedures. You know, we've been through this pandemic situation for 19 months now, 18 months, however many it is. And it's been tough, and one of the things that we as auditors have had to try and figure out is how to do proper remote auditing procedures. And there are, AICPA had some seminars on it, some other organizations have addressed it in different ways. I strongly recommend that if you're still doing remote auditing procedures, is that you try and bone up on it this year. The first year we were thrown into the pandemic. The last year, it's okay, let's do things a little bit different. This is the third probably period that you're going to be doing remote auditing. And I think that there's certain areas that we need to focus on a little bit better. The article talks about inventory observations. Now, this coming up soon, I'll just say it that, we're doing our first remote inventory audit, not using the phone and FaceTime and say, you see that over there? We found an organization that sends out cameras, 360 cameras, and you log on, and as they're walking around you can kind of see. Now I'm sure that there's some flaws that are there, but it's not like holding a phone and going like this. Can you turn around the other way? So it helps out a little bit. We're going to try. If you want to get some information about it, give me a call in a few weeks after you watch this. I'll let you know what it was like, but I don't want to give any information about the company on the presentation. Client personnel interviews, it's very difficult to do remotely, we know that. Assessing control environment and the effectiveness of the controls. So those are the two big AICPA things. You see I spent a lot of time on SAS 145 because that was the biggest item. Two FASB things came out. There was a FASB meeting. They talked about segment reporting and significant segment expenses categories as they relate to reporting to the regular provided information, the chief operating decision maker. And then there was a FASAC. Come up with a new one for you. We had PCC, we've got FASB, FASAC, the Financial Accounting Standard Advisory Council. If you've never heard of this, they had a meeting that was since 1973, they've advised the board, the FASB, on issues relating to projects of the board on the board's agenda, possible new agenda items, and project priorities. So they recently had a meeting, and the area that they touched on was investor outreach and financial performance reporting and disaggregation of performance information. And then lastly, at the PCAOB, they came out with an update and a preview of the 2020 inspection observations. There are, of course, some big areas that they identified. This is available online. If you can't get a copy of it, shoot me an email. I'll send you a copy. It's public domain information, but it's great that they send this information out. Anytime the AACPA and the PCAOB send out information for us to enhance our audit quality, I think it's excellent. And this document shows where some of the weaker areas are. Common deficiency areas are revenue and related accounts. First one they list, inventory, business combinations, goodwill, intangible assets, allowance for loan losses, investment securities, long-lived assets, cash and cash equivalents, and other. So I apologize for going so fast today, but that SAS 145 is a big one, and I want you to be aware of it and get as much information that I can give you within the 10 minutes out of this. So, in closing, a reminder that the Society's annual Accounting and Auditing Conference is coming up on November 9th. And on December 1st, Renee Rampula, she's a great speaker and really knowledgeable. She is teaching an auditing standards update where she will go over recently issued guidance from the AICPA and the PCAOB. Go to njcpa.org/events for more information on these events and many other upcoming courses. And as always, I recommend that you join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. Thank you for joining us. We'll be back with a new A&A episode in 2 weeks. You can access all the IssuesWatch podcasts and episodes at njcpa.org/IssuesWatch. That's a lot. I didn't say an S in there, right? He'll kill me if I say the S.